Hello everyone, good morning. This is Rachel live from Kalkine Studios and you're watching the early trades. The domestic quarterly updates, the upcoming RBA meet and a week's lineup of key economic data releases are being closely eyed by market participants. Meanwhile, the COVID-19 threat in India continues to cast a dark shadow to the key global indexes. Let us cast an eye now over how market charter is panning out. Following the global market's performance, ASX 200 seems to be witnessing a sluggish trade during early trade hours. However, the index is picking some momentum up now. The ASX has cleared 7,100 points for the first time since pandemic sell-off. The Australian share market has hit its highest level since the pandemic sell-off through February and March last year. The S&P ASX 200 index hit 7,102.5 points on Wednesday. That was after rising 34.6 points or 0.5%. The market hasn't traded at this level since late February 2020. Asian shares risked falling for a fourth straight session on Wednesday as sentiment took a knock from a sell-off in large-cap Wall Street tech darlings, combined with talk of rising US interest rates. Holidays in Japan, China and South Korea limited the early reaction, leaving MSCI's broadest index of Asia-Pacific shares outside of Japan dithering either side of flat. Wall Street pulled back from its record trading levels overnight, with the NASDAQ composite declining 1.88%, dragged by blue-chip tech firms. The global indices dropped lower, with US Treasury yields on Tuesday as low trading volume, which was due to the holidays in both China and Japan, and a lull in economic news and a lack of a catalyst to lift stocks higher sparked a sell-off by market participants on worries that further upside in markets is limited amid high valuations. A recent surge in commodity prices helped spur talk of an inflation spike and booked the downward shift in equity markets. Looking at overall sectoral performance now, energy is the best performing sector on the ASX 200, while information technology is the major dragger. Oil prices rose more after US states eased pandemic-related restrictions, and the European Union sought to focus on tourism. Those soaring COVID-19 cases in India capped gains. Brent crude futures settled at $1.32 up at $68.88 a barrel, while WTI crude futures rose $1.20 to close at $65.69 a barrel. Oil companies such as Woodside Petroleum, Oil Surge and Santos continue their upward trend today. Meanwhile, the tech-heavy NASDAQ fell 1.88%, marking its biggest single-day decline in 6 weeks. Surprisingly, the yield on the 10-year US Treasury note fell to a low of 1.557%, a slide that normally would push technology shares higher. Signs that the US Fed remains in no rush to reel in its massive stimulus programs kept 10-year US Treasury yields slightly under pressure. Also, investors sold the high-flying tech-related stocks that have doubled the value of the NASDAQ since March 2020 lows and bought government debt, pushing yields lower. Moving on now to other major newsmakers. Defying the tech sector rout, Australia's Nearmap has tracked the best day in almost 3 months on raising financial year 2021 view. Nearmap on Tuesday raised its financial year 2021 annual contract value forecast to $128 million to $132 million. Nearmap says it expects net cash outflow to be less than $10 million this financial year. The biggest news of the day comes from the Big Four banks, Australia and New Zealand banking group. The bank announced that its cash profit from continuing operations more than doubled to $3 billion in the half year, ending 31st of March 2021. That's compared with $1.4 billion a year ago. ANZ declared an interim dividend of 70 cents, more than doubling the interim dividend it paid last year. Meanwhile, shares of network solutions provider Mobilecom has jumped the most in almost 6 months on investment from an Israeli firm. Global packaging company Amcor shares are over 5-month high as the company has upgraded its earnings growth and it's upgraded its forecast for financial year 2021. The company's GAAP net income for the quarter rose 58% to $684 million. Strickland Metals is soaring up on acquiring Silver Lake's stake in gold project. The company is set to purchase Silver Lake Resources' minority interest of 37% in Horsewell joint venture for total cash consideration. Moving on, private health insurance provider Medibank Private upgraded its growth outlook, saying it was hoping to achieve total policyholder growth of 3.5 to 4% for financial year 2021, as against earlier growth forecast in excess of 3%. In other news, global manufacturer and marketer of commercial explosives and fertilizers, Incitec Pivot subsidiary Incitec Fertilizers has signed a 20-year offtake agreement with Pengana Chemicals and Fertilizers. Plenty Group's warehouse funding facility for renewable energy and personal lending purposes has been increased to $200 million from $100 million. The lending healthcare player Healius says its non-COVID revenue has grown during the second half of financial year 2021. The company's pathology coronavirus testing reached 3 million total COVID tests during the March quarter. Diversified funds management group Pengana Capital Group has awarded the management of 2 global equity strategies to Axiom Investors. Looking at the charged up crypto space now, cryptocurrency Ethereum bolstered another record peak of $3,530. That's before paring gains to trade 1.9% lower. On the other hand, the largest cryptocurrency Bitcoin fell 4.66% to $54,553. Let us see what impact the markets this week will have. The market eagerly awaits for the US employment report for April, which is expected to be released later this week on May the 7th. Also, a speech by Deputy Governor Guy Debelle on Thursday, along with the statement on monetary policy on Friday, will be keenly tracked. There will also be a release of commodity market trends and earnings of several Australian and US companies, which we'll be keeping a close eye on. Well, that's all for now. Stay tuned for more live updates on Kalkine TV across the economy, markets and sectors. I'm Rachel signing off for now.